Are you nervous about selling puts? Worried you'll get stuck with a terrible stock or blow up your account? If that sounds like you, please watch this video before you decide selling puts is just too scary. I'm going to break down why the strategy doesn't have to be intimidating, how it can actually reduce your risk, and the secrets that can help you overcome your fear, because once you know the facts, it might just become your favorite way to trade. Let me take you back to my first time attempting to sell a put. I remember sitting in my desk, heart pounding, about to click sell to open. My mind raced with worst case scenarios. What if the market crashes right after I place this trade? What if I get assigned thousands of dollars of stock I don't want? I was terrified that I'd lose a fortune overnight. But here's the twist. I discovered that if you're prepared and you understand what you're doing, selling a cash secured put can actually be less risky than buying shares outright. In fact, the moment I clicked sell and collected that premium, I realized something. I was getting paid to potentially buy shares of a company I already liked and at a lower price than the current market. My fear, it turned out, was based mostly on misunderstanding the strategy. So, why is it not as horrifying as it seems? 1, you're only selling puts on stocks you want to own. The biggest misconception is that you'll get stuck with a losing position. But if you choose fundamentally strong, sound companies you already want to buy, you're effectively doing the same thing as placing a limit order, except you're getting paid for it. 2, built-in discount. If you sell a put at a lower strike than the current market price, you're committing to buying shares at a discount. Plus, you collect a premium upfront, further reducing your cost basis. And 3, full control over risk. Since it's cash secured, you know exactly how much money you're putting on the line from day one. No margin, no hidden pitfalls, just straightforward risk management. Once I realized those 3 points, selling puts stopped being scary and started being an exciting tool in my trading arsenal. Of course, there are traps that new traders can fall into. 1, selling puts on junk stocks. A high premium can be tempting, but a bad stock can tank, leaving you with shares nobody wants. If you're going to own shares, make sure it's something you wouldn't mind holding for the long haul. 2, not keeping the cash secured. If you don't have the cash to buy the shares, you're flirting with trouble. Always keep enough money in your account to cover the cost of assignment. This is not a place for reckless margin trading. 3, picking the wrong strike or expiration. Picking a strike price way out of the money might mean minimal premium. Picking a strike that's too close could mean a high chance of assignment. Strike a balance that fits your risk tolerance. The same goes for expiration. Select a timeline that aligns with your strategy. I like to sell cash secured puts with a delta of 20 to 30 and an expiration date that's about 30 to 45 days out. Avoid these traps and you're already ahead of 90% of traders who dabble in options without a game plan. Let's look at a real-life inspiration. Warren Buffett, he's not known as a gunslinging options trader, right? But he's repeatedly used cash-secured puts to effectively set limit orders on solid companies. He's collected millions in premium by telling the market, sure, I'll buy those shares if they drop to my target price, but until then, pay me. And guess what? He's often happy if the shares don't drop to that price because he walks away with the premium. No shares purchased and no extra risk. Another example, in 2020 when markets were fluctuating wildly, several hedge funds utilized put selling strategies on blue chip companies. Instead of mindlessly buying at uncertain prices, they set their own terms, often ending up with shares at a discount or just pocketing the extra income. The key takeaway? These aren't reckless gamblers. They're some of the most cautious and calculated investors in the world. If they can do it, so can you, if you do it correctly. I'm still scared, you might say. What if the stock plummets? Worst case scenario, you end up buying 100 shares at a strike price you chose. Now, if you picked a good company, you'll own those shares at a lower cost than buying them in the current market price. Also remember, you've already pocketed the premium. That premium acts like the partial cushion against any drop. But let's be real. Stocks can drop. That's the inherent risk of investing. However, that risk is identical to if you just bought the shares outright at today's price, except here, you get the shares cheaper and have premium in hand. That's why selling cash secured puts can lower your overall risk if done thoughtfully. Here's a simple process to ease into selling puts. 1, pick a stock you love. Emphasis on love. Ideally, pick a stable blue chip company or a solid growth stock you've researched thoroughly. 2, set your target price. Ask yourself, at what price would I be thrilled to own 100 shares? That's your put strike. 3. Check the premium. Make sure the premium is worthwhile for the risk you're taking. If it's too low or too high, adjust your strike or expiration date. 4. Stay cash secured. Keep enough funds in your account to cover the purchase. That eliminates margin-related nightmares. 5. Sell the put and monitor. Keep an eye on the stock. If it dips below the strike, you'll likely be assigned. If it doesn't, the option expires worthless and you get to keep the premium. For many, the fear of selling puts isn't just about losing money. It's about feeling out of control. Here are a few quick tips to keep anxiety in check. Start small. Trade one contract on a lower price stable stock. No need to jump into the high price ticker. Paper trade first. Practice in a demo account to see how it feels to watch your hypothetical position move. Have an exit plan. You can buy back the put before expiration if the trade moves against you or your thesis changes. If you'd like a more hands-on approach or want to see how I apply these strategies in real time, I have a Patreon community where you can access educational resources curated to deepen your knowledge, get immediate access to the exact trades I'm making along with my analysis so you can learn the why behind every move. Join our community chat, where like-minded traders swap ideas, share wins and losses, and help each other stay accountable. I'd love to see you there if you want to take your trading confidence to the next level. I recently heard from one of my students, Sarah, who was terrified of options. She decided to start by selling one put contract on a solid dividend stock. She picked a strike price a few dollars below the current market, and to her surprise, the stock stayed above that level, so she walked away with the full premium. Now she's got a new income stream and the confidence to scale up because she experienced how straightforward it can be. If you're afraid to sell puts, I get it. I've been there. But the reality is, when you approach the strategy the right way, it can lower your risk and potentially accelerate your portfolio's growth faster than buying shares outright. Like this video if you found it helpful, subscribe for more option trading and investing tips, and let me know in the comments, what's your biggest fear about selling puts and how do you plan to overcome it? Now watch this next video where I show you how I make money from trades even when I'm wrong. I'll see you on the next one.